Hello guys, welcome to this week's Magic FX video. This week I'm going to be talking about using cemented highs and lows as a special confluence for counter trend trading. Okay, so straight into the charts, let's have a look. Here we are on Euro USD, of course, on the 15-minute, and if we take a look at current price, clearly we're bullish here. At the moment, we've broken a major bullish high. We've had bullish minor structure coming up here, and to the left, obviously over here, we trended quite heavily bearish. Now, if we're looking on the higher time frame to build a story for potential shorts, we're kind of looking at the previous last valid minor range on the 4 hour was between this cemented high and this low. All right. So really we'd kind of want price to come up to this premium area in order to take shorts. However, if price doesn't quite get there, is there a way to look for shorts perhaps in a more short-term sense? And yes, there is, and that's by looking at cemented highs and lows. And now if you go back to my first ever video on structure, I explain what that is. It's when a candle closes below a candle to its left or above a candle to its left. So this down here, that's a cemented low because this candle is closed above the candle to its left. This here is a cemented high. This candle closed below the candle to its left. And so on. It's as simple as that, right? So what does that mean? When you get a cemented low or high, if you're looking at pullbacks, you'll often see, like, even though this is a bullish trend, you'll see that when the pullback starts after a breaker structure, you get a cemented high, and price drops down from there to what you would expect to be the discount of the previous leg. So that's how you can kind of frame up counter trend trades. Okay, so now we've broken this high here, and right here we cemented the high after this break. Okay, then price came back up to the extreme and broke down. Now this was a major break structure. The major low was down here, the major high is up here. If we look at this, if you'd have managed to get into a short here, you could again have taken it down to the discount of the 15-minute, like there. So it all works out, okay? And then price shot back up. Now, what's important as well is every other confluence we use, you don't just take every cemented 15-minute high and think, right, that's going to go down. You want to look to the left as well. Is it a valid area to take sells from? For me, this one wasn't as valid to take sells from because you can see we've tapped into a mitigated 15-minute range. You can see price broke down, tapped into the premium and continued on. So this is mitigated. There's nothing really here to suggest for me that price was going to have a strong reaction there. It had a decent reaction, but for me it doesn't fit my rules. If we look to the left at what we reacted to over here, because again we've got a cemented high. This candle closed below this candle to its left, and this is what would have been current price. What did we tap into over here? If we look to the left, well, we tapped into this range right here, and this was an unmitigated range. You can see this was the high, this was the low. Nothing has tapped into this premium until now. So we've tapped into a 15-minute unmitigated premium. We've cemented a 15-minute high. What do we expect now? Well, really, we would expect a pullback to the discount of the 15-minute current range. Okay. Now, another confluence to this is the fact that in this previous pullback, you see we broke up, pulled back, broke up again. Look at this, it didn't mitigate anything valid to the left. All it did was tap into some imbalance in this discount. So for me, that's another telltale sign that price is going to come down and tap into a valid zone, at least in this area. Price hasn't quite finished its job here, so there's more reason for price to come even lower. So at this point in our journey, we can look at taking shorts. Okay. Now, also what you can see is that price has just missed the discount of this zone, so it's still valid to take price lower from here. If we had tapped into the discount already, I'd be more hesitant to continue taking shorts. So if we look at what's happened here on the 1 minute now, we've had a break structure. We've had a 1 minute chock at the top right here. So if we mark that on with a nice blue chock line, and then we cement a substructural low and break down again, and we can see here, what did we do? Well, we mitigated the premium of this first substructural leg, and then so we've got substructural order flow. All right, price continues down. Now, what we're looking for? Well, we're looking for price to mitigate a zone in here to take sells down further. Okay, so looking in this area, what do we want to see? Well, we want to see price mitigate a valid zone in here, so it could be preferably the extreme. Now, if we get an extreme mitigation, I'll be more happy to take a 5-second entry, but because there are other areas below, if we get a 1 minute chock from either of these areas, I'll be happy to take an entry from there. Our price has tapped into this first area in the premium. We do get a 1 minute change of character. So now I'll be looking for 5-second entries in here. Okay, so price taps back in there. What happened to that wick? That's what I want to know. We keep going. We're looking for a 5-second break of structure. Price keeps moving up. Nothing overly suggesting an entry on the 5-second, and we break out of that. So no entry there. The 5 seconds saves us from taking a loss there. Okay. So have we broken? Yeah, we broke that high. So fine. We will continue on. Price now has tapped into our extreme zone. So I would be happy from this extreme to take a 5-second entry if it occurs. So let's have a look here. Now, a 5-second boss would be all the way down here. We get our 5-second break of structure here. So, okay. Let's see if price comes back into our area. Price comes back in, tags us in. And yeah, so as you can see here, I used a 2-pip stop. I've noticed price has been more volatile lately on EU, and you know, I'm actually happy to use larger stop losses now. But yeah, could you have still gotten in this with a smaller stop loss? You could have taken minimum a 1.4 for that, covering the high. But yeah, I found I like to get involved in price with the larger stop losses, and you can still get involved fairly risk-free quite quickly. So prices started moving down from there. So now, what would I be looking at? Okay, well, in terms of targets, I'd be saying, right, well, first of all, I would certainly take some sort of partial at the 15-minute discount zone, okay? Then for a higher target, what I'd be looking at would be something, a valid zone in the 15-minute premium or discount. So yeah, a nice 28R I would be absolutely over the moon with, okay? So, sorry, internet's been a little bit slow here. But yeah, as you can see, we would have taken our first partial here for about 8R, and we'd be waiting, and then price eventually makes its way down. Can we look at a higher time frame? And yeah, there you go, target hit. Okay, so yeah, the idea of this is, you know, it's all about taking counter trend trades that make sense, building the story for the counter trend trades, in terms of looking at order flow and what's been mitigated before, and in terms of figuring out, you know, when is it valid to take a trade, and a cemented 15-minute high or low is a great confluence to add to your trading in order to take trades. It's also something to really look out for if you're taking continuations down. So, for example, if you're taking shorts to the downside, price taps into some kind of discount or area that may be valid for a pullback, and then if it cements a low, you want to stay out of 1 minute continuations from there, because the cemented 15-minute low means you're most likely going to get a 15-minute pullback from that point. So it's a good sign to stay out of trades. So yeah, hope that was helpful for you, and see you next week.